Hello and welcome to the penultimate chapter from the Modern Business series. We're still reading accounting principles, and as ever, just before we get started, a reminder, this is a text from 1936 from the Alexander Hamilton Institute, and if you haven't seen the introduction to the series or any of the other videos up to chapter 20, head over to my YouTube channel and check those out. So chapter 20 is mysteriously called Constructive Accounting. Now, if you're not an accountant, you're probably going to have no idea what constructive accounting may have suggested to me, but it was an accounting where we take an opening balance and a closing balance and purchases and or expenses or a few of the items that have gone through in a single period and recreate those accounts. That's what I thought it was going to be. But in reading the chapter, that is not what this is about. So I thought this was going to be a really short chapter, but I actually think it's going to be a really interesting chapter. So just to note, in 1936, that constructive accounting, as they termed it, denotes a phase of accounting technique which has been developed in the United States of America, but has not yet, to any great extent, been brought into practice in Australia. The accountants of several large undertakings, however, have introduced systems of account classifications on similar lines. And the only textbooks published on the subject are in the USA, and therefore this chapter has been reproduced exactly as it was written for Alexander Hamilton for America. So that's very mysterious that this was almost a new version of accounting, whatever it was, in 1936. So the accountant has two rather distinct types of work to perform. These were described in chapter 16 as consisting of analysis and interpretation of accounting data on the one hand, and the administration of the clerical work involved in making the detailed records on the other. So as we talked about, doing the actual accounting, bookkeeping work, and actually managing a team of people to get that done. The chief accountant of any large organisation divides her time between these two important functions. A sufficient amount of illustrative material has been given in the earlier chapters to show the nature of the accountant's work in these fields. The term constructive accounting is applied to that phase of accounting practice which consists in the design and installation of practicable accounting systems. So it's actually not really about accounting as we would probably know the term, but it's actually about developing and implementing accounting systems. So this includes both the development of principles for the analysis of accounting data and the rules or procedure that control the recording and reporting of the essential facts concerning business operations. So it's both actually looking at the accounting data and what we're going to be using the accounting or bookkeeping data for, and how that data is recorded. So that's what they've termed constructive accounting. While it is necessary in a large organisation to subdivide the work and delegate authority, it is essential to have all decisions made in accordance with the broad policies of the organisation. This can only be accomplished on the basis of a well-constructed plan of code or rules. The accounting codes of some corporations set forth in detail the methods of handling every conceivable type of transaction that might occur. Any person in the organisation may find out how to record properly the particular transactions that she is called upon to handle. So they're saying you have this set of rules on how transactions are handled, and that is still very true today, and most organisations do have these. And if you are ever looking for an example of these, you'll find them sometimes in the footnotes of the financial statements. So if there's been an accounting policy change, so they were recording depreciation in one way previously and have changed that method of depreciation, it's found in the notes. So these sets of rules and policies do exist currently. But according to the book, they originated from railroad accountants. So railroad accountants were pioneers in the field of constructive accounting in the United States. The American Railway Accounting Officers Association was formed in the early 1880s, in response to a demand for uniform methods of reporting intercompany revenues and joint facility expenses. So obviously railroads were a railroads were a big business in the turn of the century, the late 1800s, early 1900s, and apparently their accountants were pioneers. So we're not going to go into the text of that. There's talk about trade unions and associations and railroads, and really that's not that applicable. But there is a problem around this constructive accounting. Constructive basically being the development of accounting rules and procedures. So to construct an adequate system of accounting for an enterprise, it is essential to have a definite plan of procedure. The purpose of a system is to obtain as much information concerning the operations of business as possible, consistent with a reasonable expenditure of funds for clerical work. There are 3 steps involved in attaining that result. They are as follows. So first, the objectives of the system should be stated in definite terms. An account classification should be constructed that will give the information desired as stated in the objectives. And third, a system of records should be devised that will enable the accounting department to collect the necessary data in an economical manner. This is a very overly wordy way of saying, and this is what I say to clients all the time, is what is it you want to report? Start with that as your aim. And from there you can work backwards and work out how you need to report things and what account classifications you're going to be using. And there's actually some good examples, even though it's fairly heavy on the text front. The accountant is confronted with difficult problems in connection with each of these steps. The first consists of clarifying the statement of general problems. An accountant could expect just about as effective results from a system constructed without a clear statement of objectives as could an architect who started to plan a building without knowing the purpose for which the structure was to be used. So you're not going to get an effective system if the objective of that system isn't used, just like you're not going to get a nice functioning building if you don't know what the function of that building is. In the second place, an account classification sets up the plans and specifications for attaining the detailed results. It is, in a sense, a sailing chart that keeps the accountant on the proper course. Just as the architect sets forth certain definite specifications which must be followed in the construction of a building, so the accountant lays out a classification of accounts that controls bookkeeping operations. A more example on this actually does come in the next couple of pages, but basically there are certain rules that need to be followed, just like there are certain ways a building should be built. Finally, a system of records and routines must be devised that will carry the plans and specifications into effect. To carry the analogy with the architect still further, this step corresponds to the instructions of the contractor to the workmen who assemble the materials and place them in the proper location in order to complete the structure. So this is making sure that we're doing the things we have set out to do, so recording things on a regular basis, doing appropriate cross-checks and reconciliations, making sure transactions are reviewed and allocated correctly. So we're looking for first what it is we want to achieve, and then we're working backwards to what are the account classifications that are going to allow us to achieve those objectives, and then backwards one step more, what are the rules and the ways we do bookkeeping or accounting or finance that will achieve the objectives as well. There are certain broad common objectives to all accounting systems. These have been emphasized throughout the earlier chapters. A balance sheet statement showing the financial condition at certain stated intervals, and a profit and loss statement showing the income and expense of a period are essential to any system. At this point, however, the objectives branch off from a common purpose to meet the individual needs of specific organizations. And there are then 3 examples of the type of needs that are specific to organizations. So there's administrative or management control of the organization, there's information for investors, bankers and creditors, and then there's also for public control and taxes. And that is something that you have to bear in mind when you are developing an accounting system, your accounting policies and procedures, is how is this information going to be used by the Australian Taxation Office, for example. You can't prepare something that isn't suitable for the Australian Taxation Office. There are lots of other ways that bigger organizations need to make sure that they're looking at information for the people in the business that are responsible for some of the operations of the business. But after we've determined what those objectives are, and if you aren't sure what the objectives of your business should be, get help, work with somebody. Like personally, when I work with clients, we work through this process of defining what it is they would like to report and then making the system work for what it is they want to report. And I can help and advise around what your objectives should be, as well as how the system should operate. So after the objectives have been clearly formulated, the account classification may be drawn upon. The purpose of the classification is to afford a means of collecting the data required, as set out in the objectives. The accounts are classified into groups in outline form, so they may be summarized in any way desired. And this is one of the things that clients ask me all the time is, what accounts should I use? And my response is, what is it do you want to track? What is it that you want to track? Thus, one general account for manufacturing may be sufficient to meet the needs of the general administrative officers, but a great many accounts showing the details would be needed for the use of the production manager. Now, in a small business or a sole trader business, you probably only need to be pleasing one person internally and one person externally, the ATO. But the extent to which you take subdivision of these accounts is something that you are in control of. It is desirable to make the account classification flexible so that new accounts may be added or old ones admitted as occasions arise. And this is another problem I see all the time, is people think there's a final answer to a bookkeeping system, and there isn't. The bookkeeping system needs to evolve as your business evolves. Then once we have those classifications correct, we have to look at the system of actually recording the information. So the account classification determines the structure of the system, but there still remains the question of office procedure, or we call these accounting procedures or policies. This is a very difficult part of the work. It is necessary to collect data from a great many sources and provide systems of internal check so as to ensure the accounting records are accurate. A complete accounting system touches every part of an organisation. The original entries are made by persons in the operating departments who are not at all interested in bookkeeping records. And I would actually say it's not just the people in the operating departments that aren't that interested in bookkeeping records. I see that with owners of sole trade businesses, so the actual owner is not overly interested in actually keeping the books up to date. They are useful and they find the information useful, but the actual procedure of recording is not something they enjoy. But the effectiveness of the whole system depends upon the care with which these original records are prepared. So if you are preparing a bookkeeping system half-heartedly and not doing an accurate job, then the whole system can simply be wrecked by having something so complicated that the work women do not understand how to use the system. And this is about, as well as setting out your objectives, setting up your account classifications, or your chart of accounts as we actually call it, and then setting up your routines of recording that data, it's also learning the system and learning the processes and looking how you can optimize those and streamline those, and I always have suggestions for that. But not in the way that it becomes so complicated that you actually can't use it. So if these streamlining and automating actually give you more of a headache than less of a headache, you can take them away just so you get that really easy to use system. And in here they go into preparing actual instructions for those who would like to handle the records, and I often work with customers, clients, to make this into a bit of a checklist so they know each month or each period when they're doing their accounting what it is they need to be looking for. This suggests you have a complete chart of account classifications, so chart of accounts, and so you can see the relationship of the accounts to the structure as a whole, a list of the accounts with an explanation of the contents and purpose of each. So if you have multiple accounts with similar names, knowing exactly which transaction should be recorded in each account. A list of books used for original entries and ledgers, and instructions for preparing and closing the accounts. Really, that's handled by bookkeeping software. A list of the accounting forms and instructions, and a list of equipment such as bookkeeping machines. Now, this goes then into a more specifically constructing a system for a new business. The procedure that has been described in the preceding sections pertains to an established business. It may appear to be rather complicated and involved. This is undoubtedly true, but the requests for statements and information cover such a variety of demands that only an elaborate system will provide the necessary data. The problems encountered in constructing a system for an entirely new enterprise, however, are much more difficult. In this case, there is no basis for judging the needs of the business. There are no historical records showing how the organisation operates or indicating the special requirements of executive officers. It's extremely difficult to estimate in advance just exactly what volume of business will be, and therefore how elaborate the system should be. And that is very true, that if it's a new business to you and you're new to bookkeeping, or if you're moving from a paper-based system or a spreadsheet to a proper bookkeeping software, that it's a little bit of an unknown, and that's where you might want to work with somebody to get them to help you use their experience of how things are split up and how things are recorded to your benefit. And then just to, in summary, the constructive accounting is a broad field which includes within its scope all of the activities of the accountant. It requires an understanding of business policies and operating methods, as well as the technical accounting procedures. There are certain principles that guide to serve the accountant in devising a system of accounts and putting it into practice. Operation. And then there's a bit of a form showing the way that they think this should be set out. So the statement of the objectives, the preparation of the classifications, and the application of routine methods applied to the different sections of accounting. It requires a great deal of training and experience to become properly equipped to perform the work of an accountant. But the reports prepared from the most elaborate system of records can be readily understood by anyone who is acquainted with the fundamental principles of accounting. So it's just suggesting that actually setting up a system, yes, is a lot of hard work or a lot of complicated work, or can be, that requires some skills and knowledge around accounting and business. But once you've achieved that, the outcomes should be applicable to everybody with an accounting knowledge. If you've enjoyed this video, please hit like, comment on anything that you've enjoyed particularly, and if you would like to see more videos on this series, Modern Business Accounting Principles, please subscribe. But until next week, have a great week.